I want to welcome everyone to the continuation of the budgets. In this one, we're going to do the cash budgets. We're going to do cash receipts, one cash payment budget, and then we also didn't do the cash budget. So what we have on this one is the sales amounts that we have. These are from our budgets, because down here you see 615, 515, and 675. And then 710 is the 14.2 times the $50. And the November, December will be given to you. First thing we have to do is, here's our information that we have up here. Okay, 20% is for cash, 15% is collected in the month of the sale, 65% the following month, 18% the second month. However, we do have a little extra information. If it's in the month of the sale, they get a 1% discount and the 1.5% finance charge the second month. So the first thing we need to do is find out how much cash did each of these sales represent. So we have to get 550 times 20%. Make sure you have 4. And it's for 0. So 110,000. And then what we'll do is copy that down. Because what we want is the credit sales. And that'll be the 550 minus the 110. Because that's our credit sales. And we copy that down, or you subtract them, and you can do it either way. Okay, now this is our cash receipts budget. So the first thing we want to put in here is our cash sales. January is 123,000, February is 103,000, and March is 135. And then that's our quarter total, so we just add those up. Okay. Now for November, because it takes 2 months to collect it, so for the November budget, we will have the 440,000 times 18% times, I'll do it this way on the first one, 1 plus 0.015, and then close, which would be 1.015 from this point forward. 0 decimals. So that gives us 80,388. Now, the rest of this we don't worry about because we've collected it. So over here I'm going to total these up so that I have all the totals for later. I'm just going to copy it down. I know it's zeros, but that's okay. It'll fill in later. And then, like I said, these amounts here will be 0. For the December one, that's the month after. So we have 470, just do a round function. We have the 472 times the 65%. And there's nothing strange about that one. Okay. For February, that's the second month following the sale. So that would also be the 472, but this time is times 18%. Times 1.015. Remember, the 0.015 is the 1.5% added to it. So that's the 86,234, and that's going to be 0. Okay. January sales equal the round. Look at January is 492 times our percentage of 15% times, I'll do it this way this time, 1 if I price 100% minus 0.01, which is our discount. Like I said, from now on I'll use 0.99. So that's 73,062. In February, that's when we collect the 65% of it, or the bulk of it, times the 65%. And then in March is when we collect the balance of it. Now, notice we also have, if you add those two percentages up, they do not add up to 100%. And that's because we allow 2% for bad debts. Times 18% times 1.015. Because we expect a 1% discount, or 2% bad debt. That's why this doesn't add up to 100%. February, well, you don't collect anything in January. And this is the month of the sale. So we have in February 412,000 times 15% times 0.99. Okay, then in February here, we collect in March for February sales, we collect the February sales, the 65% because it's the month following. Okay. And then March, we don't collect anything in January or February, so I'll just put zeros in there. You don't have to. On this one, we collect 15%, and remember that has a 1% discount. So it's the 540 times the 15% times 0.99, comma 0. Okay, so, and then we have the monthly totals, which we want to include the 123 for. And so this is our monthly totals. We collect a total of 1,726,344. Okay. Now the 44,000 for the cash payment, that's our cash receipts budget. For the cash payment budget, we're going to do material budgets. We're going to pay the materials. The 44,550 would be given to you. That's the beginning one. Okay, that finishes up December, which we pay in January. And here's my totals. Okay. January payments. Well, with 30% in the month of the purchase. So we come down here to the material budget, which is right here. So cost of material is 74,000. Whoops. Try this again. I forgot something, okay. 74,000 times 30%. 22, okay. And then here, that's where we pay the bulk of it at 70%. So it's a 74,000 times the 70%. And that's when it's paid for. So in March, we don't pay anything. Okay. So let's bring our totals down like we did before. So we have everything totaled up already. Okay. So yeah. Then we have we're doing February payments. Sorry. January, you don't pay anything. For February, month of the sale. Forgot my round function again. Okay, February is the month of the sale. That's at 30%. Okay. And over here, this is March. We'll pay 70% of February's times 27. Okay. And for March, January, February is going to be 0. And in March, we will pay 30% of the March purchase. And okay. So then we add the monthly totals up, which is what we really are interested in, is the monthly totals. Okay. And we have there. So then what we have, that's our cash, that's the example of a cash disbursements budget. Okay. This one here has to be given to you, 243,590. Okay. That's a must. That has to be given. Okay. Cash collections. Well, we did that up here. Okay. And that's when we can actually bring it across because we have all those totals. These can't be filled in until we get done here. Okay. Cash available is these two added together. And if you want, you can add those across. These totals don't mean anything yet. Okay, that's what we have so far. Materials, that's that total there. That's the material purchase. We can bring that total across. Labor, we look at the labor budget over down here, and that's the cost for January, so it's $142,800. We bring that total across. Overhead, this is from our overhead budget, and then we can bring that total across. Okay, now here's some extra information. Okay, and this is on that page you don't have, which I will, yeah, let's bring this over. I'll just do that. Copy, paste. Okay, here's the extra information that you need. That's off the information page. Taxes of $143,900 will be paid in January. Okay. We also know the planned equipment purchase for February is $258,000. So that will go there. And in March investment, we don't know yet. Okay. So total expenditures, that's going to be those added up. Okay. Then we have ending cash balance is equal to my cash available minus my expenditures, which is $266. So this is equal to the ending balance. That fills that part in. And then we take the $836 minus my expenditures is $183. And that's going to be the $183. And then we have this one so far is $755 minus the $464, $291. Okay, so we come up here to events. Now here we can't subtract it because it gives you a circular reference. But down here, if you want to do a little calculation, you'd have equal 291, 825, and we wanted a balance of 150,000 in the account. Okay, we have to do it in thousands, so what we put in here is 141,000. Okay, and that gives us 150,000. That's a little calculation because it states in here that if March investment, we want a March investment if anything over 150,000, it has to be given in thousands. So 150,000, because with that we had 290,000 to start with. 291,825. We want 150,000 minimum balance, so we can invest 141,000. Okay. Then we come up here and let's finish getting these totals here. Okay. So then if we take this one minus this one, okay, what did I do? I've got this one equal my beginning balance. There, we come up with the same totals. That is the cash budgets. So hopefully this helps a little bit. Like I said, review this several times if you need to, but that's the cash budget and that's how you come up with it. So talk to you later.